Hello folks, this is Don Cloud from Cloud Investments LLC with an educational economic update for January 2019. In this month's video, I'll discuss some of the major headlines that influenced markets in December. I will also provide insight into what these developments could mean for you as an investor. So please stay tuned at the end of this video for a required disclosure statement. So, how did we close out 2018? To put it bluntly, December was a challenging, volatile month for stocks as equities also ricocheted between losses and gains. Want an illustration of how dramatic the turbulence was? Consider the Dow's performance on the days surrounding Christmas. First, the Dow experienced its worst Christmas Eve in history. Then the very next day, the index posted its largest gain ever. That experience was pretty much December 2018 in a nutshell. In fact, despite positive returns on the year's final trading day, the Dow and the S&P 500 had their worst December results since 1931. All three major domestic indices also had their worst annual returns in a decade. In 2018, the S&P 500 lost 6.2%. The Dow declined 5.6%, and the Nasdaq gave back 3.9%. Just a few months ago, the indices were reaching new record highs. So, why the about-face? Many investors sold off stocks in reaction to the worries about economic growth, the Federal Reserve's policies, and ongoing trade tension. However, that answer could oversimplify the situation. Some people blamed computer-generated trading for the intense fluctuations. Others said we were in a period of hypersensitivity to headlines. Of course, investors had many headlines to digest, including a government shutdown that was on its 10th day by New Year's Eve. But we want to take a moment and look beyond the biggest headlines and see what the data told us in December. In the latest readings, we learned that personal income was up 4.2% over the same time in 2017. The manufacturing and service sectors both beat expectations. The economy also grew at 3.4% annualized rate in the third quarter. That reading is slightly lower than the initial projections, but at the same time, only one quarter had faster growth in the past 4 years, and that's the second quarter of 2018. In other words, several data points are showing that beneath market gyrations, the economy is still strong. Federal Reserve Chairman Powell echoed these sentiments when announcing interest rate increases in December. More concerns might be here, and the markets might not like the interest rate increases. But by the Fed's assessment, our current circumstances indicate a very healthy economy. In the new year ahead, we will continue to monitor the markets, real risk, and opportunities. One thing that won't sway us, however, are the headlines. Well, that's it for this month's Educational Economic Update. Here are some upcoming events we'd like you to know about. Retirement Planning Today at UAH, January 24th and 31st at 6 p.m. State of the Markets at Jackson Center, January 29th, and that'll be at 5:30 p.m. Retirement Outlook for 2019 will be held at Terra Nova's. That'll be February 7th and the 12th at 6 p.m. Once again, this is Don Cloud with Cloud Investments LLC signing off for the month of January 2019. Now please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 256-715-0094. We'd be happy to talk.